I'm here with Rich Bockmann and Mark Maurer, the two reporters that wrote this month's cover story on Cushman Wakefield's forthcoming IPO. So Mark, we were actually planning on writing this story about Cushman Wakefield before they filed their paperwork for their IPO, because there's been a lot of turmoil at the company. One of the sources that you guys talked to said that it was basically a shit show. Can you explain what he or she meant?
Sure, that referred to just a lot of change that had been happening at the company, from budget cuts affecting travel expenses to just resources that brokers needed to do their jobs, and along the way there have been some layoffs of support staff, and some top brokers have exited, potentially as a result of this turmoil.
Let's talk about the DTZ merger. In 2015, TPG, the private equity giant, bought Cushman for $2 billion and merged it with DTZ. How did that change the culture at the company, and how did that sort of impact what's happening on the ground?
In a short period of time, there were more or less 4 companies kind of operating under the same roof. DTZ, Cassidy Turley, Massey Knakkel, and Cushman Wakefield. And they all had to kind of adapt to working with each other, and so there was just like perhaps a clash of personalities and operations.
You had 4 different company presidents, 4 different sets of executives. I think some people's jobs got redundant, but they were still working at the company, so they had to cope with, had to merge those companies together and had to make it one streamlined business.
Rich, can you talk a little bit about the culture and morale at the company right now?
Yeah, I think that a lot of people are excited, especially those who own stock in the company. They're expecting to see quite a payday when the IPO actually happens. In the meantime, to get there, there's a lot of pressure points. We've seen some brokers leave, especially on the investment sales side. A lot of the former Massey Knakkel brokers have left. I think that, to go back to what Mark said earlier about a clash of cultures, I don't think that a lot of the Massey Knakkel leaders were really happy to be there in the first place. They started negotiating their contracts early in to make an earlier exit, and we've seen a lot of them left now.
Rumors have been swirling for a couple of years now that Cushman was going to file for this IPO, but what did we actually learn from the prospectus that they filed with the SEC?
It really gave us an inside look to TPG's playbook for the company and how they've structured the finances at it. TPG bought it for about $2 billion. Today it has assets of roughly $6 billion with about $3 billion in debt on it. And that debt, the majority of it is coming due in 2021 and 2022. So TPG's plan for the IPO is to pay off a large portion of that debt. We also learned that Cushman's been operating at a net loss since TPG bought it in 2015. That's been improving as its revenues have climbed from about $4 billion in 2015 to roughly $7 billion now.
So the stakes are high for this IPO. You've talked to analysts that said it's like TPG's liquidity event. That is the debt pay down. Mm-hmm. So what are they looking to raise?
That's one thing that we did not learn yet in the prospectus. We don't know how many shares they want to offer, at what price, and how much they're looking to raise.
I just wanted to read you guys something from the piece that I thought was particularly poignant. You wrote that insiders question what shape the company will be in after the IPO, a shell of itself with low morale and a skeleton leadership team, or a leaner outfit with more dry powder. Can you explain exactly what you meant by that?
Yeah, as I mentioned before, a lot of the senior brokers there have stock in the company, and that ties them to it, but after the liquidity event, they may not have those bonds and they may look to leave. We recently saw 30-year veteran Gus Field leave to go to Tishman Speyer. He was sort of an institution there at the company. Gene Spiegelman, who had previously run their retail division, left to go to Ripco. So people wonder if the brokers who have been around for years and really sort of made Cushman will be there.
Mark, I'm going to pivot to you. Rich was just talking about how Cushman has actually lost a lot of talent, but back in 2016 they actually poached the top investment sales team in the city. Doug Harmon and Adam Spies. Can you talk a little bit about what impact that duo has had on the company's bottom line?
Amid this chaotic atmosphere in New York, there has been a bright spot. Doug Harmon and Adam Spies have been regaining market share on the capital markets side, institutional investment sales in New York through their team. We saw a bit in 2017 as they climbed to #1 with the help of the Massey-Knackel operation at Cushman in our investment sales firms ranking, but we've seen it even more so this year as they've really ramped up the deals that they're brokering.
And so some of the biggest deals they've done this year, you want to just tick some of them off?
Yeah, they represented Jamestown in the $2.4 billion sale of the Chelsea Market Building to Google, and they also were involved with the St. John's Terminal deal and 1515 Broadway, which is closing.
What do you think Cushman is going to look like a year from now?
Well, it's hard to say, but I'd say following the IPO, they have an increased opportunity to acquire smaller companies and maybe ramp up their capital markets operations in major cities in areas where they were lagging, and also, as we mentioned, pay off that debt. There's a $2.6 billion in debt that's due in 2021.
Great, thank you guys so much. This was really insightful.
Thank you.
Thank you.